Okay, so the economy is shrinking, the economy is deflating, jobs are being lost, GDP is shrinking, but the amount of debt in the system is actually not shrinking at all. So, in fact, what can we conclude from this? We can conclude from this that the debt sellers, the debt shysters, are merely using the U.S. economy and the people in that economy as a mechanism to put out more bad debt. So we're entering into this indentured servitude phase of the American economy. But again, let me just move on to something else now. On your KirbyAnalytics.com site, which is a must-go-to site, KirbyAnalytics.com, you report that the CFTC, the Commodity Futures Trading Commission, has recently started suppressing the disclosure of banks involved in the silver futures market. The silver futures market, CFTC, involved in suppressing data on the silver futures market. What's going on there?
There's been a great amount of controversy raised with the Commodities Futures Trading Commission over the past year and a half, and this activity's been spearheaded by mostly by silver market analyst Ted Butler. There's been a huge letter-writing campaign underway. GATA, which is a name that you're familiar with, Max, they've been throwing their support behind Mr. Butler's findings, and his findings have been in the CFTC's own data. There's ample evidence to suggest that the silver market has indeed been manipulated for a very long time. So what the CFTC has now done is they've decided that they're going to change the way they report the data, and presto, we will have no more visible signs, effectively we will have no more visible signs of market manipulation.
The Fed has also stopped reporting the identities of direct bidders for U.S. Treasury bonds. Is this significant?
Well, you know, Max, we all know, unless you've been living under a rock, you know that the amount of, or the percentage of U.S. debt that's being auctioned, increasing amounts of it over the past couple of years in particular, has been picked up or monetized by the U.S. Federal Reserve. And the extent to which the U.S. Fed is monetizing U.S. government debt, which is buying their own bonds that they're issuing, they basically have to change the way they report the auction data to disguise the direct involvement of the U.S. Federal Reserve and or their proxies. So what they do is they like to blur the lines and obfuscate the columns. They make the lines between the columns in terms of who's buying the debt. They try to make the lines fuzzy, and this way they can disguise outright Fed buying of the U.S. government's debt that the Fed's auctioning.
Okay, so we know that the Chinese have lost their appetite for U.S. Treasury bonds. So the response for the U.S. government is not to tighten up their economy and to be competitive on the world stage, but merely to fudge the numbers. And hopefully they'll do more of this offshore buying of Treasury bonds through the Cayman Island accounts. We know that there's a lot of fraud going on there. We know that they're coercing the Japanese to buy these Treasury bonds and trying to go through the back door by putting Toyota out of the business and say either the government buys more U.S. Treasury bonds, we're going to take your entire auto industry offline. So they're trying to find ways to make up for the Chinese shortfall, because the Chinese finally realized that, you know, they've got over $1 trillion U.S. dollars in associated U.S. dollar denominated paper, and it looks like it's all going to become worthless. And so the U.S. in response to that is just getting more obfuscating, more arcane, more statistically lying to the people and the rest of the world. Let's move on to finally the IMF recently announced it was selling, that's the International Monetary Fund, recently announced it was selling 191 tons of gold on the open market. First of all, where does the IMF actually get this gold? And second of all, is it real, or the IMF sales really designed to merely raise money for poor people? Can you talk a little bit about this?
All IMF gold is owned by countries, and each country that owns sovereign gold, they pledge a certain amount to the IMF to remain in good standing as IMF members. But the amount that each country owns is counted domestically as being sovereign, but the amount they pledge to the IMF is double counted when you're looking at measuring global amounts held by major entities. The IMF suddenly appears as owning 3,000 tons of gold, but it's only pledged gold that is ostensibly part of the U.S.'s 8,100 metric tons, or Germany's 2,000 or 3,000 metric tons. There's a whole lot of double counting that goes on between IMF gold and other countries' sovereign gold. And central banks, Max, are notorious for double counting gold and making it look like they have more in the vaults than they do. And we know that they lend and lease gold. They don't differentiate between lent or leased gold, which has left the vault, and physical stocks that are in the vault. They're all counted on the same line, whether it's a paper IOU or whether it's physical gold. And when you're talking about international standards and the way central banks keep track of gold, nothing is clear. And as to whether the IMF is actually legitimately selling gold or whether it's a housekeeping, bookkeeping exercise to ostensibly validate gold that's already left the vaults in certain countries, we can't be sure.
That's all the time we have for Rob Kirby. Thanks so much for being on the edge.
Thanks so much, Max. Pleasure being.
And that's going to do it for this edition of On the Edge. I want to thank my guests, Stacey Herbert and Rob Kirby. If you want to send me an email, please do so to ontheedge@presstv.com. Until next time, this is Mex Keiser saying bye, y'all.